Us through everything. Biltmore Capital Advisors, Chief Investment Officer, headline each that they feel deserves you. Do you think about Ford in that sense? Do you think about GM in that sense?
Well, the good thing about some of these companies is that they're able to borrow at ridiculously low rates. I mean, Ford is junk, and they borrowed at 5% long term. But the problem is they just don't really have anywhere to put this money, and there's no demand for it. So, we really don't like these automakers at this point. It's really not an area that we invest in. And again, we don't see a whole lot of demand going forward.
Because Ford, the stock price has just taken such a big hit, mainly because of worries about European losses. They're forecasting $1 billion, and Morgan Stanley says they're going to lose $2 billion in Europe. So,
and everyone's going to China. That's where the demand is.
And
everybody's going to China.
There,
GM is going to China. Ford's going to China, and that's where the future is.
All right,
they can't control it. There's a period of time where the market says, you know what, we shouldn't be lending to the U.S. at these rates, and they're going to bid up these rates, and there's nothing the Fed can do.
Okay,
about
so then what happens, right? Interest rates are going to go up, and think about this. Think about all the money that we're going to end up paying interest on. Yeah. And when those rates go up, what's that going to do? Does that push the U.S. government into default?
That's a problem. I mean, we're lucky now that we're borrowing at next to nothing. Yeah. But that quickly can turn.
Very quickly, and I think that's the problem. And that's what I don't think anyone's really talking about. Everyone's just going, they're not worried, they're not worried. They're not worried until they're worried, and at that point...
There's lots to be worried about in today's markets. I think one of the things that's keeping me up at night is how reliant the market is on QE. Look, we're going into an earnings season that we're going to have the first earnings season, which is going to be less than a year ago as far as S&P 500 earnings. Companies aren't spending, fiscal cliff, and investors are more and more reliant on QE, whether it's here or whether it's stimulus throughout the world. So what happens when earnings continue to disappoint? We can't continue to bid up this market. The Fed can't continue to bid up this market on more QE. So I really am worried about what happens when we get just some disappointments and when Europe continues to fail and GDP continues to fall.
Jimi Hendrix, are the markets stoned?
Well, if you listen to some of the lyrics, they say, I don't know if I'm going up or down. I don't know if we're in happy or in misery. And I think looking forward in the markets...
Excuse me while I kiss this guy.
Not that part. But in any event, we have this purple haze of what's going on. I mean, there's positives, there's negatives, and I think investors have a hard time right now really developing strategy as we look forward in the final quarter.